Hello, everybody. Welcome to the stream. So today we're pretty much just going to answer any questions you guys have about the strat, trading, execution, any of it really, psychology as well. So if you guys have any questions to start it off, that'd be awesome. But before I guess all those questions hit the chat, for anyone that's just tuning in, what we do with the strat is we trade three universal truths, which we can simply find down in here. If we go to our extra content, these are going to have all the reversal and continuation patterns that the market can do, including concepts such as time frame continuity to identify algorithmic trading, as well as the broadening formation to help us gauge magnitude. And this is the whole strat in one cheat sheet. So any questions anyone has is what we're going to be talking about today. If you want to learn more about the strat, we have a multitude of videos on my channel, as well as a boot camp. It starts actually tomorrow. So if you're interested in something like that, you have all of tonight to try and get in there, and then tomorrow it is closed off. And we do not do a boot camp till next year, 2025. So it's going to be the last one this year. And that being said, though, how is everybody doing? And for anyone that's in premium or in the boot camp, I just ask you guys, please throw your questions in the YouTube chat, because that is where I'm going to be looking. Doing good? Any trades that you're looking at or anything? The boot camp. So last time it was $300, which was half off. This time around it is $600. And with that price increase, we actually do have less people, which is expected. But that also means that the people that are in the boot camp are going to get more of a personalized learning. So right now, I don't think we have more than, I don't know if it's like 40, 50 people or something. Sand dollar. Well, thank you. Access what in the Discord? You talking about the boot camp? If you are talking about the boot camp, yes. When you sign up for boot camp, you're going to link your Discord account, and then you will be put into the Discord, and then you type !boot camp, and you get your boot camp role. And I believe we're going to be adding your premium role, the free month that you get, at the end of September. So you got all of September access to us, and then the end of September through all of October for access to the Discord. Is there an agenda? Can you see the content for the bootcamp? If you go and actually watch, it's on stratalerts.com/bootcamp. We actually go through like the agenda that is in the PDFs there. I could just open it up right here and we could do a little chat about that. But what you're gonna see, so this was the first boot camp course we did, and now we got it completely redesigned. So we start with an intro, then we talk about the scenarios, ones, twos, and threes, and then we talk about time frame continuity. Then we go over our actionable signals, including things like the 322, the inside bar, the Rev Strat, the pivot machine gun, etc. Then we talk about the broadening formation, which is that third universal truth. And then after that, it is all just stop losses, which is risk management, and then how we do the analysis incorporating all three of the truths. We call it combinations, or just using all that we know to be true all at once. And then in here, you're going to see we have all the different trading, I guess, universes, you would say, are the trading setups that we go through. And then we talk about options, that type of stuff, as well as things that people are going to struggle with and how to get around those. So like that's the whole entire, I guess, boot camp in a nutshell here. And it's going to be going pretty much throughout all of September. So Tuesday through Friday for 4 weeks. And everything's recorded. You get all of these PDFs, and you get access to any future boot camps for free. So you really get a good deal getting access to all of that, all the downloads, all of the indicators, anything you could really want. Yeah, all right. So we got some questions about the strat. Let's take a look. So where would you draw the broadening formation on ENVX currently? So ENVX. So the first thing you'll notice is we want to start higher time frame, work lower. So if we go on the year, you're going to see we don't really have a broadening formation on the year. Doesn't mean we don't have one, just means they've only made a high and a low, right? So there's no outside bar here because it's just been going down. When we go to the quarter, you're going to see what happened this quarter actually. So did make the new lows here. So you'd have the major try looking like this. But once you have this outside quarter, and I'm going to shrink it down in here so you can see that. Once you have this outside quarter, that's why we say, and this is the next question we'll see in the chat, once a three, always a three. It tells us once you have this outside bar, it is a broadening formation. So not only do you have this big try, we call it the macro try, but you get the micro try, or the sub try. where the broadening formation looks like this. You see the new lows, then the new highs, and then the new highs, and then back through the previous range. So when that occurs, you're going to see reversals like this. So we get the quarterly try that sets up last quarter, 2-2 month on the second month of the quarter, causing that, or back through that previous outside quarter. So it's still trying to go down there, 570. You can see the shooter month actionable signal below this, 1398, 2 up, 2 down reversal, right back through all that. And if we go to the weekly, you see it's the same try on the weekly, because the universal truth of the try, when you go up time frames, it doesn't just disappear, it's still going to be there. So you can see on the week, it was a 3-2 continuation off the highs, and there was a Momo shooter down in here and slight triangle out, and then 2-2 down last week. If you drop down into the daily, you're going to have your sub tries in there as well. So you can see you get the major try, and then also on the daily, you get the poke up. And you can see they poke down, taking out both sides of the mother bar here. And now they're just kind of grinding down at the lows of it. And you're also going to get another sub try in here on the daily, right to left like this. So you see they poke up, 3-2 off the highs, then going all the way down. All right, so different ways to play the scenario 3 outside bar. And I wish the chat was in somewhere so I wasn't looking down here, but just forgive me for that. But different ways to play the scenario 3. I always hear once a 3, always a 3. So you can trade the potential 3. And then once you have the 3, you can trade on the knowledge that a 3 is a broadening formation. Meaning, if we go to Dow Jones, now someone mentioned that in the chat, but Dow Jones, this would be an example of trading the potential 3 and then trading with the knowledge of the 3. So when this week goes 2 up in red, countering this weekly hammer, that's a potential 3. Because if you're going to take out a high and a low, it's going to go 2 up in red first and then become 3. So we always say you do not get a 3 unless you have a 2 first. Can't happen any other way. So if we go to here on the daily, you'll see when this goes 2 up, 2 down reversal on Thursday, the weekly open was here on Monday. So it goes 2 up, 2 down. The week, the day, and the month, because we just opened the new month of August here, went red, as well as the 60-minute, which is the intraday groups. So when that occurs, at that point, your full time frame continuity down. If we load up your continuity, you'll see this. You can see everything went red here. This is a 60-day week and month just shown as colors here. So when that occurs, we know we're going to try and take out that outside week, which is this, 398.00. So they take that out. 2-2 reversal, and then they take that out. Now, once that's occurred, you can see they poke up and poke down. So you have a broadening formation because of that outside week. So we can draw that right to left. Then you'll see they gap down outside of it. And then once they start reclaiming this, we know then, since this is an outside week, when we reclaim an outside bar above this, 393.71, we are going where? Back up there, 411.97. And if you go and watch our nightly videos, you can check it out Monday night. So Monday night on the 12th of August, and literally we put them on my channel, and I put the dates there so you can specifically go and do this. Be like, what were they looking at when this was occurring? Sorry about that. If we go to this, we can go and type in, so is what? It was 8-1124. So this was 8-12. Let me see. Nightly video. We'll just go to the playlist. That'll make it a lot easier. We also always put them in the playlist so you guys can get access to that quickly. But if we scroll through this stuff, you know what? Forgive me. I don't know. Is it 8-11 or did I put it out 8-12? Oh, 8-12. I'm just misreading it. Yeah, so we go to 8-12. You're going to see us talking about exactly this. So we can see Dow Jones. They go inside day, right, on the Monday. So inside up or inside down. So if this breaks up, you're going to see that would take that 3-2-2 week. We talked about that on the weekend video. If it goes inside down, it's PMG. So either way, if it goes down, we're trading it. If it goes up, we're trading it because good things happen in both directions. So if this were to have broken down, it'd be PMG with full time frame continuity. And if it breaks up, the week, day, and 60 groups are all green at that point. So that tells us we should go after that. And it was the only index that went inside on this Monday. So when we see that breaks inside up on Tuesday, that's going to confirm all the indexes going up, which is where we line up the simultaneous breaks. So you can see Monday here, they went up on SPY, did not go 2-2 down, they went 2 up again. Tells you they bought and then came back to buy more. And you're going to see similarly a 2-2 week with the Dow Jones at that point. So when all of this is happening across every index, 2-2 up, back into this 3 on the Dow Jones, you know it's going up there. 41170. And that's where if we go into the weekend videos, we could pick that out as well. But so you can either cause the 3 or trade the 3 as a broadening formation. Those are the 2 ways we're going to use it. The only other way we would use it is 3-2 expansion, where the range starts increasing in size. So let's say Dow Jones, instead of having this gap down buy, which is a scenario we talk about all the time where it gaps down, goes green, and starts coming back through. Let's say it opens and then it went 3-2 down. We'd actually look to short it through all these guys to try and expand that range bigger. And I don't have a crazy good example off the top of my head. I guess McDonald's. So a lot of the 8X people, they're trading those 3-2s, specifically the 1-3-2s is what they're looking for. So like McDonald's, for example, broadening formation right to left. You get the 3, so you draw it out. And then when this goes 3-2 above this, 267.41, that's an expansion. It's also continuation of this reversal, and it's back through a previous range. So you have reason to believe it's going to the complete other side. So we can use the expansion of that 3. We can also trade back through that 3. We can also cause the 3. And once a 3, always a 3. So once that's occurring, either it's broadening formation expansion, or let's say it were to reclaim this, it'd be then failing. So whenever you're playing 3s, you have to be very cognizant of that. If we go to things like, I think it was CRM, this is an example of when we say once a 3, always a 3. This is also what we mean. You see they go 3 here on the daily. Then they gap up and go red. What is that trying to do? It's trying to go 3-3, right? And this is something we look for because when you do a 3, it's a broadening formation. If they did it once, they might do it again, right? Pokes up red right up in here, and you're looking to go outside day. And specifically for the gappers, to cause outside bars, you're always going to that lower time frame. This was a 2-2-5 minute right here to get short and cause that. You can also just short it right up in here on the gappers from exhaustion risk, right when that day goes red. Is there Q&A after each daily session? In the Discord, not specifically, but normally what we do is we'll put the nightly video out, and then we'll be talking in the premium chat. For anyone that has questions, we can always answer those. Most of the Q&A occurs during the day. So we'll be trading, people have questions, we'll answer those. And that's how it should be, because if you're trading, you're learning the strat or any other strategy. If you're like, hey, I don't even know if I should take this because I'm learning this stuff, you want to ask me or Sarah, or Tom, he's not so much around, but me or Sarah specifically, and say like, hey, should I take this? It's setting up on the flip, looking to take it. Do I do that or not? And then we'll tell you like, yeah, do that, or we'll call you off and be like, that's an inside week, that's an inside day. Don't mess with it. And with the bootcamp specifically, there's gonna be Q&A. If that's what your question was, bootcamp specifically, Q&A is gonna be, it's like, this is how it's structured. You'll have the live, I guess, teaching. We're actually going to pre-record all that stuff so we don't have any mistakes and stuff in there. And then right after that, we'll do the Q&A until every question's answered. Doesn't matter how long that takes. And that's going to happen all throughout September. So I'm a beginner starting with only 312 setups, day and hourly time frame. Besides continuity, broadening formation location, other potential triggers on time frames, what else should you be looking at? Really, the big question you want to ask yourself is like, what is the next 2? What will it negate, create, or do? So when your 312 setup's going to trigger, you're looking at them, you want to ask, if this setup works, is this going to negate continuity? Is it going to create a new signal, or is it going to create an enforced pattern on a higher time frame? Or what else could it do, right? So does it just confirm continuity you already have? I don't really have a good example of a 312 off the top of my head here. I guess we could go to, like, if we're just looking at the 60. So for example, NVAX. You can see it was a 2 up, 2 down week, and it's already hit its magnitude. So exhaustion risk at 1104. On the day, it's a 3, right? So that's a broadening formation. We'll want to know about that. We draw it right to left, like so. When we go to the 60, you want to ask yourself, if this 3 on 2 works, what does it create, negate, or do? And if it fails, what does it create, negate, or do? So in this case, you can see it goes 3, 1, 2 down. So at that point, you don't have any weekly magnitude. The day is a 2 up in red, so you've got that. And if we go to the monthly, since we didn't look at that, the month was simply continuation down. So there really wasn't much signals or magnitudes on those higher time frames. It was just a 60 signal. So therefore, you don't have much evidence. You just have a 60 signal, no other signals with any magnitudes that you could put in force or that you're confirming. So when this goes inside down, you'd say, will it create, negate, or do anything? Not really. It's just going to confirm full time frame continuity down. And it's continuation, 312 continuation down. Then the other part of this is, if that signal does not work, what is that trying to create, negate, or do? So you can see it goes initially for like a few pennies, right? Then 2 down, right? Fails to make the new low. So that tells you these sellers were not very aggressive here. And then when it starts coming back 2 down in green here, that's when you start covering. Because at that point, you have no evidence of that seller anymore. And that 60 flips green. Then it goes 3. And now when you have this big 3, like we were talking about with the 3s before, this can either expand or go 3, 3, right? Or maybe it gets stuck inside. So when this goes 3, 2 up, what is that trying to do? What could that negate, create, or do? Well, in this case, it would negate the day. If that goes 3, 2 up and starts coming back through these guys. And then since it negates the day, you'd have the 60 and day in control. The other thing it would do is you can see it would cause that 3, 2 on the day to go back and force, expansion to the upside. And this is back through a previous range. And then what does that negate, create, or do on the week? You'll see on the week, that works and then creates this signal. So we're in a constant series of confirming what's happening or negating what's happening. And therefore, with the strat, we're not so much, I guess, married to a direction. As long as the move is occurring up or down and it's tradable, that's all that we care about. So if things do fail, we can ask ourselves, well, if it fails, can we go and take it the other way? How much evidence would we have? What would that negate, create, or do? So if you constantly ask yourself that question and you're playing just 3-1 setups, you're going to do perfectly fine. And that being said, I'm trying to think. We have some 3-1 setups like in the industrial sector. I don't have the big list up in front of me right now. But if we go to strat alerts, we can go and take a look here. So we can look for the 3-1 month, and we'll just go industrial since we got a lot of inside months there. So you can see you got a ton of 3-1s industrial. So this is setting up a simultaneous 3-1-2 in the industrial sector. So we can go through these and we can just say like, well, if these work, what does it negate, create, or do? It's like ALLE. If that goes 3-1-2 above this, 139.46, what does it negate, create, or do on these higher time frames? Well, the quarter is already a 3. So once a 3, always a 3. We got to be aware of that, but it could still get bigger. If we go on the year, you can see that monthly signal would confirm the yearly signal. So that's what it would do. It would confirm the year. And therefore, we'd still be looking to take this stuff out, 148.70 with a 3-1-2 month to make it happen. And in this case, this is momentum. It's continuation. So we'd want to be aware of that. You talk about equal highs, equal lows, that type of stuff. So when it comes to equal highs and lows, really all you're identifying is the fact that price is stuck inside a previous range. So unlike ICT traders who are identifying it as just liquidity, which is partially true, people will put their stops there, we want to identify it as an equilibrium where we're stuck inside the previous range. So for example, you can see NASDAQ in this case makes equal highs all up in here. Okay. So all that tells us is that price, first of all, was too weak to take these guys out. So the buyers in here, although they're buying, not strong enough to make new highs. The next thing it tells us is that all of this price action gets stuck inside the previous range. So since we know when we go 1, we're going to have to become a 2 at some point, it tells us this. We go to the daily. You're going to see we're completely just mother bar to this. So whenever you see equal highs, all it's telling you is that you're inside a previous range. And or you could say relative equal highs or relative equal lows. So that's what we're identifying. And in this case, you can see they're still too weak to make the new highs. So they tried during Tuesday or Monday. Forgive me. Yeah, this was technically Monday's trading, but it was only for until noon. But they tried, and they're still too weak to do that. So we're still stuck inside. We have 2 days stuck inside of this. So that is all that is talking about. Now, when we see those with the strat, Google is a good example of this on a weekly basis. And if you have any, or if you hear any like background noise, let me know. But let's go in here. So when you're stuck inside a previous range, you can see we go 3, 1. Then we're kind of stuck inside 1, 2, 3 weeks stuck inside of this stuff. We treat this previous range that we're stuck inside of as levels of reclaim, meaning we prefer not to short this breakout. You can take trades to trigger those levels, yes, which is what the signals are for, like a daily reversal that causes this to get taken out. We can do that. But what we prefer is let this take out those levels first and then look to reclaim and go completely back through the previous range. You can see in this case, it's kind of a pivot machine gun where you take out all these guys in one go from the lows down here all the way to the highs. So you can see the same thing is going to happen if we go to Apple on the weekly. This is actually happening twice in here. But you can see they go inside. So you can say relative equal lows, relative equal highs in this stuff, right? And then once it breaks down and starts coming back through, we actually prefer to take out both sides of that previous range here. It's like that's what we're looking for. And what it looks like if we were to just draw it out. Makes sense. Price moves. Eventually it gets stuck inside and it fails to take new lows, fails to take new highs. So what's going to occur is you're going to have new broadening formations that start up in here. Once these expand, you're either going to make the new lows, taking this stuff out, or it'll make the new highs, taking this stuff out. So over time, that broadening formation gets bigger. So if you're trading during an equilibrium, what you're looking for is you want to make that new high, fail, then make the new low. Or make this new low, fail, and then make the new high to make those highs or lows get taken out. And if you're waiting for those equal highs or lows to get taken out, all that's happening is this. You're getting your broadening formation that forms. And then once it's taken out, you'll notice this is the top of a broadening formation. So either this is that 3-2 expansion we were just talking about, where it keeps going and stays out, or you make this slight higher high to this stuff and then completely back through that try, taking out this high and this low. And we can say that for certain because of this. You'll see the Rev Strat. So the Rev Strat, the 1, 2, 2, this would be like when ICT talks about accumulation, manipulation, distribution, it's the same thing. Inside bar, break lower, then countered by a more aggressive buyer. And then inside bar, break higher, countered by a more aggressive seller. And you'll see this is one of the main things we're looking for because it's such a good setup. So you can have the 1 countered by a full outside bar in the same day, normally occurring on a gap. And you can also have the 1, 3, 2, which would show price going inside, slight higher high, back through this inside bar, makes the new low, then rallies all the way back up, and then it goes 3-2 reversal and makes the high. This is going to be one of the least, I guess, not least likely to work, but the least occurring of the patterns. It's not that often that occurs, but that's something we look for. If a 2-bar closes within the range of the previous candle, that means it is not enforced. Should I be looking for a reversal? I guess your question, not sure if it's presented correctly, but let's just say, for example, so it closes. It closes within the range of the previous bar. So in this case, like Apple, you have a 2 down that closes and reclaims this previous range. It's not enforced. We should be looking for a reversal. Yes. It's like when you're going to get a 2-2 reversal, it's going to start as something that looks like a potential outside bar first, and then you'll get a 2-2 reversal because it runs out of time to go outside bar. So like on Apple on this weekly example, you can see it goes 3. On like a daily or maybe a 2-day chart, there's a 2-2 reversal in there that causes the 3. So this is something we're looking for reversals. We call this a 2 down in green, where it's conflicted. It's going down, but the buyers are more aggressive, followed by a 2 to the upside where the buyers are now in control and it's still going up. So like when you go to SPY, how do we know to be a buyer right above this? Because that's a 2-2 reversal setting up this week. And you can go and see that on our weekend video we put out at the beginning of August. And the same thing's going to be applying to like the daily charts. In this case, we're not reclaiming this, but you see it starts as a 2 down in green, and it goes 2-2 reversal on the next day. So that's something we look for. What would be a good strategy for swing trading? So the best swing trades with the like least amount of, I guess, stress you're going to be holding, simultaneous breaks between the indexes or sectors and specific stocks. So like the index example that we just gave out on YouTube, right, on the nightly videos and the weekend video, 2-2-week SPY above 534.51. That was a simultaneous break with the Dow Jones above 39649. They were both 2-2 reversal week. It also simultaneously broke with the Qs above 45206. So notice every single thing was a 2-2 week. There's 270 reversal signals when this occurred across the whole market that we scan. So that's going to be the best, and it's going to be your highest probability swing trade. Now, when these occurred on the indexes, they were still red on the month. So the highest probability ones were actually things that were already full time frame continuity up, such as Netflix, which you're going to notice big move and then inside week. So they're still setting up to add. We call this a 2-2 reversal entry, inside bar add to get more. And you'll notice it went 2-2, pivot machine gun through these guys. And that occurred with the XLK and the Qs and the semis, all of that happening. But when that occurred on Netflix, if we go to the monthly chart and mark out the weekly signal, you'll notice the month was already green. And then just like we talked with the 3, notice how this 3 tells us it could go 3 again, because if they did it once, they may do it again. The 2-2 week occurs, and then it goes 3 on the month. Because if you're going to have a 3, you either need a 3-2 or a 2-2 to happen first on a lower time frame to this potential 3. So that 2-2 week made it happen. Down in here, if we were to go to a 2-week chart, you see the hammer 2-week chart, 2-2, that causes the 3 on the higher time frame. So this has to happen. So the best swing trades, it's not a specific setup, but it's more so simultaneous break confirming across the market. So another example we could say with 2-2 reversals was the semis. The 3-2-2, which we've been talking about, right? Below this, 270.49. We mentioned the semis were going to simultaneously break. We also pointed out like LRCX, the potential 2-2 reversal, pivot machine gun back through these guys to go through this whole broadening formation. And you can see they just crater because they hit the bid. They went full time from continuity down. And you see on the month, there's your 2 up, go 3 with a 2-2 reversal on the second week of the month to make that happen. And now next month, that could become 3-2-2 up if they're going to recover, but we'll see. It's a little weaker than the rest. There's also things like Marvel, which we pointed out. And this was not so much on the nightly or the weekend video, but it was something we found intra week. 2-2 week here on Marvel, puke. And then here, 2-2 week, flip it long. So you make all the money down 14%, then you make it all the way back up 28%. Beautiful stuff. There's also MU. You see simultaneous 2-2, or actually, forgive me here. Monday the 15th. Let me just make sure. Yeah, so Monday the 15th. Marvel, or MU, I mean. This one was specifically mentioned in the weekend video, and you can go back. Once again, they're time stamped, so you can do that. Go back to the, the third weekend video of July. You're going to notice this. Below 130.07, this goes inside week down. So when we're doing this confirming and negating between sectors and specific stocks, or between the market ETFs like SPY, Dow Jones, IBM, the Qs, which are your indexes, and sectors, what we're looking for is relative strength and weakness. So when everything else in the semis is going 2-2 reversal, anything inside bar is relatively weak because it did not go up and take out last week's highs, unlike the rest of the semis. So when this goes inside down, it's the weakest one to do that. And you can see it's actually still staying down there, and they even sold more this week going into the end of the month. So when we compare this on the monthly, which, damn trading view, but let's just say the monthly, it looks like, it would look like this. Let's see, this was the beginning of July, end of July. Now the monthly, you can see it's kind of a doji down in here. It's not really a hammer. It's kind of a shooter on the month. But when we compare that to like the semi SMH, you see the semis, on a monthly basis, notice how they have this nice hammer. So since the semis did not have that inside week, they're actually still stronger than MU in that case. So MU stays down because MU is still relatively weaker than the rest of the market, and we identified it here. So inside bars give you the relatively strong and weak things, and that will also do things like this. So when SPY went simultaneous 2-2 with every other index doing that, Dow Jones, IBM, the Qs, we found this in the staples. The staples were at 131. So this is the 312 setup for whoever was looking to trade that stuff. You'll notice it had full time frame continuity above 79.40. And unlike everything else in the SPY that went 2 down the previous week, you can see the 5th of August, go back to SPY. Notice how this is 2 down on the week. XLP is not. So what does that tell you about the staples? Well, what it tells you is it's relatively strong because it did not take out the previous week lows. And we could then infer, we could say, they're sitting on the bid in here. They're just gathering shares, right? Because everything else went down and this did not. So they're sitting on the bid here, gathering shares, accumulating. When it goes inside up, that equilibrium's going higher and it's confirming the SPY reversal, the Qs reversal, the Dow Jones reversal, all that stuff. And it's the relatively strong one. So you can see it's up now 4%. It's not the biggest mover in the market, but I believe that happened staples, I think utilities as well. Yeah, so utilities, notice the inside week, inside up, and up. So also relative strength here. And this tells you it's more of a defensive posturing in the market, which normally means tech is going to be slightly weaker than the rest, which it has been in this case. See tech a little weaker, whereas we go to SPY, it's almost at the all-time highs again. And if we go to the Dow's already up there, right? So more of a weaker or defensive posturing is what we call that. And you can Google and read about that stuff. It's a very known phenomenon. We just have a really good way of tracking it with the strat. So that answers your question. With swing trading, trade with those indexes, those sector ETFs, add evidence to your trades, and then you can hold without stressing because you can look and say, well, if we go to staples, for example, if we just look in the consumer defensive, which is your staples, we can go on the week. You can say, well, in the staples, how many 2-ups or 1s do we have last week? So we had 20 things going 2-up. How many things were going down? 6 things. So you can see it's mostly a buy in the staples at that point. All of these things are natural sells. Dollar True is something we put on the weekend video. It's down 14% last week. So that's pretty cool, right? And if we go to the 1s, you see about 8 things going inside. So most 2s in the staples are still up. So you still have more quantitative evidence that the staples are going up. So when those simultaneous breaks occur, it's telling you that this evidence in the underlying stocks that the staples holds, and the underlying stocks the SPY holds, and all these other ETFs and indexes are all going up at that point. So you have so much evidence for your trade. We pretty much say that that's going to have to work. Like when we point things out on the nightly vid and we're like, we want to know about that for sure. It's because we have so much evidence. We're like, this pretty much has to work. If it goes in force, it's going. Like it has to do that. And that's why we say when we gather evidence, we want to take, and Rob would say this, we want to take our trading, analysis from like, well, maybe if this, like potentially, we want to take it from that to like almost certainty of what we believe is going to occur. And Rob would say on his streams when he was still alive, he'd say like, well, some days you get in here and like you hear me and we're kind of like, maybe this, that, kind of this. And then other days you get in here and we're like, it's going there. And that's the difference, because when things all line up, you have just so much evidence to say what's going to happen. And it's once you start doing it, it's like magic. Like if you follow any of those 8X guys on Twitter, all they're doing is they're pretty much doing this sector analysis and going to find their 3-2 setups on any time frame, from the day, the 2-day, 3-day, 4-day, to a 2-week chart, to a 7-day chart, whatever they're doing. And they're just doing this analysis across sectors to add a ton of evidence to their trades. And that's why they'll hold into drawdown, because they're like, well, at this point, the whole sector is still going up. So even if McDonald's pulls back a little bit, doesn't change the fact that the whole sector is going up. So that's a different way of doing it. But it's still all the same concepts with the strat. So hopefully that makes sense. And for anyone that's in the boot camp and you're like, oh, this sounds really cool. When we go and take a look, you're going to see this. So simultaneous breaks. This is something we talk about. And you'll see this was an example that we traded intraday. So these breaks not only occur on big time frames, but intraday time frames. So when these breaks really get moving and you got this bright red or green continuity, you have a ton of evidence. So you can see in this case, I don't know if we showed it here. So yeah, all the energy names simultaneously weekly break down while the market's going up. So that's a definite downside signal, right? And then intraday, all the energy ETFs go inside bar 15. So right when that breaks, we're like, yeah, like that's a sell right there. And we just nailed that. And there's a lot of people who had like 4 or 5 ads into those trades and just made their whole week in one trade. And that's what we're looking to do. And once you get this big winning trade, the casino's open. You can add to it, you can reduce it, you can fully take your profit, do whatever you want. But once you're in that winning position, there's no stress really. So cool stuff. And that's about all I got as far as that's concerned. And then the way you do that, just go to Spider's sector selector. You can find theirs. There's also iShares sector ETFs, and they have like a more, I'd say, diverse list of ETFs that you can look at. But these will all track, and you can see iShares has tons of these, and this is one of 15 pages. So you can track a ton of stuff in here. And you can specifically go for equities, for example, and this will give you all your equity tracking ETFs. But you can go and mess around with that. It's a good fun time for anyone that's a little nerd. Yeah, so when it comes to all-time highs and all-time lows, it's just a matter of are you anywhere near reversing anything? So like SPY, the only time we can really be bearish SPY is when it's close or it's taking out last month's lows. So if we're going to be bearish, it has to be below this, right? 505.53. There's also a weekly signal in here, which we could be bearish on. But when it comes to trading at all-time highs like this, what you just need to understand is the continuity is going to be what tells you what's happening. So like we go to SPY, this year is a 3-1-2. And that was in the yearly video we put out at the end of 23. You can see that's still in force at this point. There was a chance of taking that out of force, but they did not. And so we had shorts, closed them, and then it went the other way, so we got long. And you can see, so when things are going to pull back, you'll notice continuity here lines up. And in this case, if we're doing this analysis using the week as our time frame, we'd want to use the weekly continuity. So we're going to use 4 time frames: the week, the month. You can also use a 2-week chart. Some people do that. And then we can use the quarter. And this will give you a really good view of what you're looking for. And then to go to the year. And we could just open 4 time frames, but this is just a little simpler for you guys to understand, hopefully. So the week will determine if the seller is in control or the buyer is in control. So you can see all of the beginning of 2024, 2-2 week on the second week of the year when it decoupled from the yearly open. They did not reverse this until here, 9% higher. So when this goes 2-2, notice the week, the month, the quarter go red. So that's a sell until that gets reversed. 2, 2, 2, 1. So it firms up inside week. At this point, we go after anything 2-2 week with full time from continuity, as it would be relative strength. We can also go after inside weeks with full time from continuity, because they would not be as weak as the SPY, right? And I believe I have an example of that for you, actually. So then you'll notice it goes inside week up. Notice the week and the year get control of price action now. So now it's going up right here. So this is where you'd flip from your short to the long, or you would take your hedges off. You'd get in here. And it goes up. And then notice when this 2-2 week occurs, at that point, the month is still really green. The year is still really green. So you can see we're nowhere near changing that continuity, unlike the previous condition that occurred here, where the month, the quarter, the week, they were all red right at the open at 523.96. So when we talk about not using lagging indicators, not using moving averages, this is what we mean, because it'll tell you, is this, coming back in, or is this just triangle layout based on your continuity? And that's not to say continuity can't change, but what it tells you is like, well, how much evidence do you have that weekly's going down? Because at this point, it's just the week, the month, the quarter, the year, all green at that point. Just the week was slightly red. Then you can see in here, the 3 on the week showing aggression. So they failed the highs and took out the lows. Something we noted. And then notice the month and the quarter go red here, here, and then overnight gap down, because the month, the quarter, and the week were all selling into the close, the end of the week here, at the end of July. And when that occurs, notice the week and the year gain control above this. 511.63, that's a buy, and they're still buying. So you can see how continuity will help you do that. And you might look at this and be like, for anyone that's just tuning into the strat, you're like, oh, this isn't live, right? It's only showing what had occurred after. Well, if the week's gonna be up 10% or 5%, it's got to go up 0.5% first, right? So it went green right here on Monday, and that tells you right there. You see the week and the week and the yearly guys gain controlled price action right here, and then it's up they go. Whereas the previous trading, you can see the month, the week, and the quarter guys, they're selling in here, and they stopped out some guys, and then right up in here. The day, the week, the quarter, and then the monthly guys start selling in here. And then it goes down in here, and then the weak guys start buying. So, is there a checklist you go through? Yeah, actually, and I'm gonna share this to you guys because I know not everyone, especially in the hard times right now, can afford the boot camp, which is fine. You can learn the strat completely for free, and we post that and we say that everywhere, even in all the bottom of the boot camp ads. We linked a lot of the free stuff. But if we go to YouTube, Smiths in the Black, I believe, or actually, and I shared this last live stream, so just an FYI for anyone that's like, is this new? So this is something we have in this stat Discord as well. We have a ton of links of educational stuff on the strat for those that can just go and learn it themselves. But if we go to education here, we can show you this is kind of what the Discord looks like. So in the education section, you're going to see Rob Smith. We got some of his coaching materials. So there's some of that cool stuff. And then there's also, and I'm only pulling this up for your question, by the way. Looks like I missed it when I was scrolling. Yeah, I posted it. Here it is. So this link here, I can put it in the chat for anyone that's looking for that. But this is going to be Rob's program, and he does have a trade checklist in here. I don't know if I'm going to spend my time to go and find it, but really the checklist is, if this signal works, what does it negate, create, or do? If this signal does not work, what does it negate, create, or do? And then the other thing you want to know is, am I inside on any of the major time frames? So are you inside 60 or day or week or month when you're entering the trade? It does not mean you can't take the trade if you're inside still, but you have to be extremely aware when you are inside of the higher time frame still, or a major time frame, because what can happen is the inside bar is still happening. So during that inside bar, you're getting price action where, and we're going to zoom out. Sorry. You're going to get inside bars. Let's say this is an inside week, but this is a 60 time frame we're looking at. What you'll get is price will go up, and then it'll go down, then it'll go up, and then it'll go down, and then it'll go up, and then down, and then up, and then down. And you get this crazy, crazy price action. We're going to get chopped up. So you have to be extremely aware when you're not making new highs or new lows on this major time frame, any of them. So like when we go to waste management, for example, it's a great example of this. You can see last month completely inside of last month's range, 331. So you get this nice volatility, and then stuck inside. Notice 3 weeks stuck inside. So you're trading an inside week and an inside month for 3 weeks. You'll notice how killed you can get doing this. So you can see 2-2 reversal does work. Takes this and this and this out, right? So nice. You get that, but you're still an inside week. Then it goes inside day all the way up and then all the way back down. Then inside up, all the way back down. The inside day again, stuck completely. And we're still mother bar to this, right? And then it goes down and then back up, and then back down, and then back up. And then you can see it goes down and then up, back down. Then you get the 3-on-2 day, which you can see exits you out of that mother bar finally. And now you can see they chopped them up towards the end of that month, but they're still staying up there. So this is why we say you have to be extremely aware of it, because if you're trading this inside bar or this inside bar or this inside bar, you can get really killed in there. Doesn't mean you can't get trades like this, where you get the 3-on-2, and it causes that weekly signal to go inside and up, and then it sets up the month for next month. You can do that, but you're only going to do that towards the end of those time frames. So if you're going to set up an inside month, you better be in there in the last week or the last couple days of the month doing that, right? And if you're going to set up an inside week, you better be in there on like Thursday or Friday trying to do that. If you're in there on Monday trying to set up an inside week, that's where you get killed, or Tuesday or Wednesday. You're going to have to do that towards the end. And that's just because we know, when the time frames close, that inside bar can break. But if it's still presently in one and it's nowhere near going up or down, you get this where you chop, 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 and kill them. And you can see in this case, the way that works, I talked a little bit about that broadening formation. We get the slight higher high, slight lower lows, so broadening formation. And then the 3-1-2 here causes you to go to the top of that, and then they expand it, and now it's acting as support. So you can see they're sitting on the bid here, and then into next month above this stuff is that monthly signal. Yeah, so for anyone that's talking about the strat, I saw one person mention like I'm struggling right now and like I hope this is a good choice. We're not gonna let you get killed. What we suggest new traders, especially if you haven't traded or had any success before, we're gonna have you trade in shares and you're gonna be using stops that are so tight you're gonna be kind of confused why they're so tight. But I promise you, it's gonna help you learn and you will not get killed doing that. So do not worry about that. And the reason we do it that way is not only because it allows you to learn without losing money, but let's say you just really struggle, like you're doing this for a couple months, you just cannot figure it out, then, you know, at least you didn't lose a ton of money doing that. Unlike other traders, they're going to go in there and they're going to lose $30,000, $40,000 and then they give up. It's like, we don't want you losing that much. That's crazy. Can I take the daily trigger but enter and manage on the fiver? Yeah, so when it comes to like daily signals, you can do whatever you'd like there. But what we're normally trying to do is, especially when you look at our nightly vids and you're like, Alex, there's like 30 signals here. I need to pick one. Well, you can filter them out by continuity or by average true range. So like if it's a stock that moves a lot, like it's a Tesla or an Apple or a Meta, maybe you just have that up and you're going to trade that right away. But what we do is we let the initial breaks happen. So like they'll break inside up or down. We filter them out to find the sector that's simultaneously going inside day break, or if there's a theme, that's something we're looking for. And then we go in there and we confirm it using the 5, 15, 30, 60 stuff. Even sometimes we'll sit on those 1 or maybe 2 or 3 minute time frames. But normally I do not take that initial or that instantaneous like daily break unless we have a ton of evidence, like when that IWM short occurred or when that Dow Jones inside day triggered the week. That's where we just take it. And even then, if it's really going to move during the day, what you have to realize is there's a signal to make that happen. The moves don't just like open and just go for no reason. There's signals to do that. So like Dow Jones, for example, this goes inside day up here, comes back in, stops out the morning guys. Then the inside 60 confirms the daily signal, and then the hammer confirms the daily signal, and they just off to the races. You get this big move through the weekly chart, right? So you're going to get these 60 signals. You're going to have ways in. The biggest thing we don't want you doing is just rushing in there. Like most people, they'll make a huge list of their trade plan and be like, these are all the best setups. Here's about 10 best setups into the new week. And the market opens. Maybe they all break a little bit, or like half of them break, and they go bye, 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 bye. And then they get stopped out, and then they're out for the rest of the day. And they just got killed. We don't want to do that. We want to let the market open a little bit and say, like, okay, well, we had these setups in industrials. We had these setups in technologies. Well, the tech aren't even breaking, so get those out of here. And then the ones in the industrials, we see like maybe 5, 10 of those setups. Maybe there's 20. We see half of them start breaking. Then the other 10 setups, we can go after those to cause the signals to trigger. And we can also go after the strongest ones and say, I'm going to take momentum or continuation entries, or you can wait for a triangle day out entry to confirm that direction. So we don't have to be that first one in. Does not mean you can't. Like everyone's going to have a different trading plan, but that's normally what we're doing intraday just to manage the risk more tight. When it comes to like a swing trader or something, you can take the daily signal and just knock it out unless the daily reverses. Your risk is going to be slightly different. Maybe your position's a little smaller than someone who's on like a 15-minute risking 10 cents if you're risking a dollar or two. But the whole analysis is the exact same. And when we go higher time frames, you just have to realize, like, let's say you take this Dow Jones inside day, it comes back in on you. This 60 still didn't reverse. So if you're a daily guy, that 60, unless that reverses, you should still be in at that point. If your whole game plan is using that daily to cause the weekly signal, you should still be in. And this is why we say we want to add to positions. So like maybe you get a small position off of here, you're risking a little more. Then the inside bar add, you get more. 2-2 hammer add, you get more, right? And then once at that point, once it's up in here, you can add to this stuff however you'd like. And once it goes green on the day, you can just buy more and put your stop at the lows here, risk their money. Even if it stops you out, you still have this big position down here. You get to just hold and find a new way in. So that's the beauty in creating that winning position. You can risk their money with wider stops. Don't do it to your money. But hopefully that makes sense. 85 watching. Please mash the like button to show your support for the channel. Thank you, Sandollar. Square and PayPal, sure. I believe these are outside months. So we already did this charting on the monthly video. But Square, this is an example of you have to be aware you're stuck inside of a higher time frame. So you can see at this point, this is your broadening formation. We're nowhere near making the highs here, nowhere near making the lows. So your broadening formation on the month here is this monthly 3, and that is it. So we look here, you see something like this. Here's your range. Now, there's no weekly signal unless it goes 2-2 down. If it were to do that, you're nowhere near last month's lows, right? So it's nowhere near 2 down on the month. So what I'd want to see is I don't want to see them stop some guys out and then start gunning for this if they're going to get moving anywhere. If it were to go 2-2 weak here, doesn't mean you can't trade it. It just means you're trading a 1. At that point, you'd rather go after things taking last month's lows than trading the things inside month, right? And if you go to like a daily chart, maybe you go 2-2 day at the beginning of the month and trigger the monthly. That could totally happen. 2-2 above that to cause the 2 up week, the 2 up month. Then you'd have the 3-2-2 magnitude up in this stuff. But at this point, the best entry, if we're going to be kind of nitpicky here, would be this. Triangle out and then get it back up into this to cause this. TFC bars available? Yeah, so I can copy and paste this TradingView link and you can get the TFC bars indicator. That's the only way to share it. And you have to favorite it. I'm not 100% sure how to do that if you don't have it already, I guess, added to your stuff. Yeah, there's 8x. How are you doing, 8x? We're just talking about some of your 3-2 stuff. We still got to get that interview, man. Maybe we could slide it in. It'd have to be a Monday this September. Any Monday this month that'd work. But anytime. All right, let's go for next Monday. I want to talk about your 3-2s and your multiple time frames, and I want to see how you're doing your invalidation. I see you're doing it like market structure or just the 2-2 against. I just want to see how you're doing that. So that's what we'd be talking about. But do you analyze from higher time frame down always? So we say there's 2 ways to do it. When you're going higher time frame down, you're starting with like a monthly signal, weekly signal, and then you're moving lower into the day and 60. So we do that, and that's like the main thing we do. But as you get towards the end of the bigger time frames, we can also go from lower time frame to higher time frame. Meaning, like on a Thursday, and DE is a great example of this. This is something we talked about a good while ago. But you can see DE. So like later in the week, we can use the daily signals to create weekly signals. So we say like if the day works, then what does the weekly do? Right? And then if the week works, what does the monthly do? So we work from the lower time frame up when we're creating signals. And if we're using smaller time frames to trigger bigger time frames, we're going to look at the bigger time frames down to look for those. So it's just 2 ways of either triggering signals or creating signals. So in this case, you'll see on Thursday, they go inside day up, pivot machine gun through these guys. So when that works, and this is the night before, you have to ask yourself, if this goes inside up, what does it negate, create, or do? So we can say bottom of the broadening formation from exhaustion risk, good. If that daily works, the weekly open is here. So you have Monday, Tuesday, Wednesday, Thursday. So it'd cause the week to go from red to green if we can get up there, if this daily works. That would set up into the next week a 2-2 week from the bottom of the try with a magnitude to take that out. So like a good pool player, you'd want to take it here to cause that. So if it works, then when that week goes green, you add more to it. Then when it goes 2-2 week, you add more to it again. And then once it's into this top of the try, this is where you start doing your profit taking. And they go inside week. And when it starts going red in here, we'd either do profit taking or we just let the rest ride and it stops us out with an inside down, depending on what you're trying to do there. In this case, you can see in here, we had Monday, 2-2 reversal, brings it back in. Tuesday, gap down, slight buy. And the 2-2 on Thursday, which causes the inside week down and then sends you to the other side of that range again. So That is a great example of that. He was a Capricorn. That's funny. Yeah, that'd be a pretty fun time. We'd hopefully we have a good trading day because we do a lot of sitting around and doing nothing when things aren't moving. But how do you play gappers using the broad information? Well, we will go straight to the gappers section. So this is one of the universes, and we pretty much give this one out for free, and we give you the gap list every morning for free via Elaine. We post it across Twitter. We post it in the Discord, I believe, for free. Forgive me. So pretty much we give this out for free. But the Gappers universe, we say it's a starting point using the 3060s just to get accustomed to the strat. And this is where we suggest using the really tight stops to just learn how the signals work. So when it comes to finding the gappers, you can use earnings reports, earnings releases, and there's also unplanned news releases, and you'll just be able to do that with gap scans and stuff. On the Strat Alert site, we do have a gap scan. Sometimes it works, sometimes it doesn't. I don't use it so much myself. But Elaine puts out a very detailed list of all the gappers and the relevant news every day, and she's like so good at that. So a great use of Elaine there. But when it comes to the gaps, one thing we're looking for, and there's a few things, but one thing we're looking for is back through previous range. So if you have a gap and you're going into pivot machine gun where you have a ton of pivots to come back through and take out, we know if we trigger this pivot, could trigger this, and the next, and so on, all the way through that. So when you have this multitude of pivots to go back through, it's the same concept as the PMG, and this is where we can get the gap up buy or the gap down sell. So it's going to work both ways. The next thing we look for, and this is my favorite pattern to trade, whenever we see them, like we're just sitting on this all morning, the kicking pattern. So you can screenshot this, but it's a type of 2-2 reversal. Normally can be a continuation or a 3-2, but we'll have a bearish and bullish kicking pattern. And what it tells you is anyone who was long yesterday, you can see 80% of that bar is green or more. Right when it opens, those guys are all in a losing position for sure. Because if it was up 5%, now it's down 6% to the open. So if you bought yesterday's close, you're down 6% right at the open. And even if you bought right at the open yesterday, even if you bought low a day, you're opening as a losing position. So what we think is all the buyers in here likely to go and hit the bid, right? And then since it's now going down, the sellers come in short as well, or sell as well. So both of those groups are selling at the same time, and you get this big kicking pattern up or down. So this is one of the main things we're looking for as far as signals right off the open go with the PMG and the kicker. And you can put these two together. It's like Costco. This is an amazing one. And I know ADEX loves trading cost, but you can see pretty much 2 days or 3 days worth of kicking pattern in here. Right there when it opens, the second that's red, we hit the bid and our stops high a day, and we just hold it all day. So it's like over 1,000% in a morning. And you can see they take out all these pivots in one go. You also see Marvel. You can see this is a form of a 2-2 reversal. We call it a kicking variation, where this gap is not completely right here at yesterday's lows, but 2-2, and then pivot machine gun through these guys. So kicker there, and then we can inside bar add down in here and hold that position. And then to the upside, this is an example from J&J. The 2-2 reversal back through previous range kicking pattern. So anytime that's green on the day, we can go after that. And then when it comes to the gap down buy, gap up sell from exhaustion risk, it has to be from exhaustion risk. This is the main thing people struggle with. The day in 60 gain immediate control. So if the 60 is green, right now the buyer is buying. Right? 60 is red, right now the seller is selling. Regardless of if the week, the month are green or red, doesn't matter. Right now is what matters if you're a day trader or you're trading the gaps. So we're looking at day in 60 continuity. So in this case, when we gap into exhaustion risk, going into recent lows to the downside or recent highs on the upside, which you'll see, we do not expect them to continue in their direction. Does not mean they can't, but we're not going to go in there with the expectation we want shorts. We go in there waiting for that to go from red to green. So in this case, you can see it actually causes a 1-3 Rev Strat. So one of those things we were talking about before. You have the 1-bar Rev Strat, the 1-3, something we look for. When this goes green, that's a buy. When it reclaims the inside bar's lows, that's a buy. And the magnitude is the mother bar highs and the inside bar highs to get taken out. So when this goes gap down green right here, how big is that magnitude? Gigantic, right? 265 to like 276, just about. So you can see when you go to lower time frames, in order to get that outside bar, you'll notice it goes 2-2 on the 30-minute right here. So 30-60 guys, you take the offer here, make your $4, and then right here, this is where you cover, or not cover, you exit your position. And then once you're good at this, you can hit the fiver. So you can see 225 in here. This is where you buy it. Your stop goes at the low of that fiver, or maybe a spread plus a penny, then up they go. And this is where you can get to adds to your position, where this works. Maybe you get the inside bar add here, doesn't work, stop out. 2-2 in here, right? Doesn't work, stop out. Rev Strat right in here, you get it. 2 going 3 goes 3, and then 3-2 continuation. And then the hammer counter shooter fiver here, the momentum hammer fiver, and just add until the daily magnitude, and then you cover or exit. Keep saying the wrong thing there. And then gap up sell is the same thing. So you can see short-term exhaustion, short-term exhaustion. So when it gaps up into recent highs, we look for the short. And if that's going to happen, it's got to be a 2-2 first. So in this case, you'll see the 60. 2 up, 2 down, short. Inside up to cover or stop out, break even, that's fine. Rev Strat actionable signal right here, 122. You see 981 to 954 in less than 2 hours. It actually drops 945. So it's like almost a $40 move in 2 hours just on the gap list. And you see how that works. And on the gaps, we'll also use those lower time frames normally towards the beginning of the day, and then we'll switch over to the 30-60s the rest of the day. So it's just examples of how that can work, and etc. But that should answer your question as far as exhaustion risk is concerned. And an example of something we did, we already talked about it earlier in the stream, but CRM with the gap up 225 right here to get short below 266.30. You can see on the day, one of the things we look for is that 3-3, right? You'll notice the gap up sell right here. Is that coming from exhaustion risk? It is. You'll see this. If we draw left to right, we have the highs here, here, and here. Gap up into exhaustion risk, recent highs, right? We're not back through previous range. We're going above the range. And right when it reclaims this, 267.30, that's when the problem starts happening. You can see they're still doing that as of the close last week. And when we say exhaustion risk, up or down, it's just the broadening formation. You can also call it triangle or broadening formation risk, just different terms for the same concept. Kicking at the top or bottom of the broadening formation, yeah, that's what we're looking for. Yeah, 8x, they kill the cost and cat. They love the Dow Jones and the industrial stuff. Rob always traded that stuff too. I always wondered it, and that's something I want to talk with 8x about. But so do you buy leaps? Personally, no, I don't really do that so much. Does not mean we don't talk about those bigger time frame trades. Like one of the really big ones we have that's still going is utilities. And if you go and look at when this occurred on the quarter, we were all over that on the daily, the weekly, and the quarterly signals. So we got a ton of signals there. But doesn't mean we don't talk about it. I just normally am not going after leaps. If I'm going to go after it, maybe like 5 months out, 6 months out, but not so much leaps. But utilities was an example of how we would do that. You see the inside quarter. This is an example of going from lower time frame to higher time frame as well to set up signals. You see the kicking variation day. So this is something we pick up on intraday. Goes 2-2 on the day here, utilities. Every utility stock did that right here on Tuesday, 16th of April. Every single one. I think there was like 4 that weren't doing that. So when that occurred, we bought it. Went 2 up again, and we said we could buy more. And you'll notice this is the weekly open here. Monday, when that goes green, we can buy more. And then that sets up, since that occurred in the latter half of the week, that's going to set up your 3-2-2 for next week. And then you can see up they go. And what that also set up was this, the monthly momentum hammer. Really big, nice move. And then it goes inside. We don't like to trade that, but we do reduce on that. You'll see when it goes back in on the week here, this is where everyone was reducing in the premium side of things. And then when you go to July, we put out the weekend videos for the 2-2 and the utilities on the second week of the month, right in here. Buy, inside bar, buy again, all the way up, inside bar, buy again. So you can see just really big trade for anyone that's going after those big time frame stuff. So we do track that stuff. I just don't trade that so much. I like going after those intraday things. I'm very much like Rob in that sense. Having faith in the signal when doing battle. So think of it this way. If the signal has a magnitude, the signal has a magnitude, right? So there's no reason not to go and trade that if it does. When it comes to doing battle, we want to do that on things that have bright green continuity. So like when you look at the SPY, look at the month, quarter, year, really green continuity. So if you're going to do battle in this stuff and you're going to try and be a buyer, trading just to the upside with that bigger continuity, this is where you'd want to do it. So that, I guess, the continuity, that's going to tell you if you should do that battle, or do you have a simultaneous break going on, right? So that's another way to gain evidence, continuity and the simultaneous break. But when it comes to multiple entries intraday, it's just a matter of creating that winning position first. Because once you have the winning trade, this is something I talk about all the time. If we, and this is something, you go to SPY, for example. So this is that weekly signal on SPY. This is Tuesday. So the week, you can see, opens really green on Tuesday. So when we get this 3-2 on here on Tuesday, once it's going all the way up into this stuff and we're up, right? When that first reversal happens, we can either reduce by half or we can hold it, depending on the type of trader. But if you reduce by half, your cost basis, let's say you bought it in here, and you get out on the inside down. If you reduce by half, your cost basis is now this. So we can put our risk down into the daily open against that daily magnitude or that daily continuity. It would also be against like a 2-2 reversal against that daily. So once that's happened, the rest of the day you can risk their money. Like let's say you make $1,000 on the way up, $500 in profit. You can go and grab a signal, right, and risk $50 on it or $100. You're risking their money that you just took. So you can take this 30 in here, goes up a little bit, takes you out of the position. Maybe you only made another $50, $100 if you're a small position guy, right? Then there's probably some 3-2-2 15s in here. Get in there, make some more money, and then goes into the close at this point. Now, the next day, this is the weekly signal still in force. When this goes 3-2-30, this actually did break, come back in and re-break, but you still have this winning position, and you already made more money on this stuff, right? So when it's up in here, you still have this previous position that's up $4 at this point. So what is it to risk 17 cents, even if you have to do it twice, 3 times? It's pretty much nothing at that point. So you can buy this all the way up in here, 2 up in red, you can reduce that position. And now again, if you made that $2.31, your cost basis on that trade is now down at low a day. So you can put your stop on the rest of that low a day. So you can see we create this position, and we create this position, and now the cost basis between those two would be somewhere like right around here. So do we have to get out at all? No. Unless you get all the way down into your cost basis here, you get to hold. So the faith in your setup going, it doesn't so much have to come from your analysis, although it should, but it should also come from the fact that if you're in a winning position, the signal's working, right? Like if you take a 30 that confirms a weekly signal or a daily signal and it just like takes off, it's working, right? You're in a winning position. So you may have to reduce it, that's fine. But once you're in that huge winner, unless the daily gets reversed, you should stay in. There's no reason to get out. And you can see green gets greener. You can see the week. At this point, it's up $7, $8, right? $9, $15, $20. And people are just going crazy when that's happening. They're like, what's happening? What's happening? And it's like, you know exactly what's happening. The weekly, yearly guys are buying, and then they negate into full time from continuity, back to the upside. So hopefully that makes sense. Current events. So what Rob would say is the signals will tell you when the markets are fragile, meaning the signals will precede the news. Is there still gonna be gaps and stuff? For sure. And I personally am under the impression that we're probably gonna have one of the biggest selling events in history hitting the market at some point. So not to scare people, but I do believe that we're gonna see some like the craziest stuff you've probably seen intraday in the coming year or years. But that being said, the signal set up first. And we can say this because when we go and look at history, it shows us exactly that. So like COVID, you get the 3 on the month first, and then it goes 3-2, and that's when it really took over to the downside, 23% down. You can also say it went 2 up in red and went 3 here first, right? So went outside month first, 320.36, and then it cratered. If you go to the week, when COVID happened, 2-2 week. Is that something we look for? Yeah. We're just talking about those 2 up in reds, right? When that's occurring, the weekly broadening formation is this. So we see that set up and we draw it out. When it gaps down into here, you're nowhere near reversing the week up. So that's not a buy at that point, right? And it's still not an exhaustion risk. We're back through a previous range. So notice how this is not a gap down buy. This is potentially a gap down sell, which it turned into. And then you expand that broadening formation. You get the inside bar continuation. So when this goes inside shooter, you can stay short or you can be short that stuff. Still every time frame red, the year, month, quarter, week, all of it. Inside down, down, then 2 go 3 after exhaustion risk right here. So you can see exhaustion risk, 234.80, right there. This is when we start covering and getting back in. Then once that month and quarter go green here, you're all in long to the highs. You're looking for back up there. So it's always going to have your universal truths occurring with the news event or before the news event. And a great example of that is actually crowd. So crowd, everyone knows about this crazy move that happened in here. We were talking about this Rev Strat on crowd way before that. We were talking about this double inside week. And it was kind of difficult to get in there later in the week. But we had the 322 on a Tuesday night on our weekend video, our nightly video list for the PMG into this stuff. And this is why we say hold winning positions. Like when it works, it tells you there's a seller there. So you can short it into here, make your 4.6%. Then you hit exhaustion risk at this gap. See like so. So exhaustion risk here, this is where we start covering. So if you cover half of it, where's your cost basis now? Well, it goes from being here to being here. So do you get to stay short that? You do. And then when this goes on the week, you're going to see this. 3-2 week down here, you get to add to it. It's now continuity all down besides the year, right? And where's it going on the weekly broadening formation? This type of stuff, right? So where's that going? 3-2 expansion. It's going down there, right? So we can get that before everyone's talking about, oh, crowd did this and that with all the security problems and whatnot, right? That's happening well before that. And this is normally because the market is going to get news before you do. I'm not going to go all conspiracy theorists and stuff, but it's just true. Like even with the Trump shooting, there was this huge bet put against Trump's stock before he got shot. So like the market's going to know something, if that makes sense. Normally, you don't really get these big crazy flash crashes out of the blue. And when you do, like the '08 flash crash, you're actually going to have strat setups to get in there. Or when it comes to like currency collapses and whatnot, you're going to see the big quarterly signals and stuff to get in there. So like Dixie on the quarter. We haven't had any news yet, but you see Dixie goes Rev Strat quarter this quarter. Boom, boom, boom. Takes them all out. So Rev Strat quarter, then takes it out. And we know Dixie's kind of fragile because if that goes inside down year, where's the broadening formation? Right? So even without any news, we can say, well, it's getting closer to doing that. If it does, it might take this, this, and this, and that'd be a big problem for the dollar because we haven't seen it drop like that since, back in '02, right? So pretty neat stuff there. Yeah, and like the news, it's just a way to drive volatility and create bigger ranges, if that makes sense. So like when Rob found out about the broadening information, it was on a gap day, or not a gap day, a Fed day. Uh, we haven't had any like crazy Fed days as of recent. They've all been kind of lackluster. Trying to think, there's a really good example of a Fed day when we used to have some more volatility on those guys. Yeah, so for example, so like even without knowing about the Fed, if you weren't looking at it all and prices starts rocking it off, well, at this point, you'll see this is all occurring Wednesday. So it goes green on the day and 60 in here. This is 60 in daily continuity and control to the upside with the Fed. And then the 2-2 back into a 3. So what do we say about the 3s earlier in the stream? It's a broadening formation. So when that 2-2-15 reclaims it, where's it going? Back down there, right? So even if you didn't know the Fed's coming, here's your 3, there's your 2-2, and this is your trade right in there. And then the same thing happens the other way. Slight lower low, and then they reclaim it. Where's it trying to go? Back up there. So the broadening formation and all the news events, it's going to go like this with the strat. It's going to really pair together well. Rob said if you trade signals into time frame continuity, good things will happen, and we stand behind that. So as long as you're doing that and you're not trading conflict or against full time frame continuity, good things happen. And then everything else is just simply a way to get more evidence on that type of scenario, where you do simultaneous breaks across sectors, or you are looking for even bigger broadening formations for bigger moves, all that type of stuff. Like these broadening formations last week were just insane. Look at these. Crazy stuff. How to use the strat scan for day trading. I already have a video out on that. I don't think I have the slideshow in here. Let's see. All right. Well, we can't really scan too much right now since the market is closed, but I can give you the scans we're doing. So when it comes to day trading specifically, it depends what setups you're going to trade. Like if you're going to be a weekly guy trading weekly signals, you're going to scan the weekly time frames, right? Since the new month's opening next month, we're going to be scanning the weekly and monthly time frames to see what's happening. But that being said, at the beginning of the week, so tomorrow morning, we're scanning month, we're scanning enforce, we're scanning just filter. So we're going to look for simultaneous breaks. That's one thing we do. We do this across the month, the week, and the daily basis. If we go on the yearly basis, you can see the ones happening right now. We got 177 yearly signals. If we go full time from continuity up, you're going to get the best ones that are still full time from continuity up going right now. And if we can go to things that hit magnitude, those would be the strongest ones. So you can see we can go in there and there's a good chunk of utilities, materials, financials, healthcares, all of those indexes. So you got materials, financials, healthcares, all simultaneous break this year. So like that's one example. But intraday, what we're scanning is each new 60. We want to know how many 60 signals do we have, as well as how many twos up and twos down do we have. And I post about this on Twitter all the time. So intraday will be like 60, current candle a 1. So this will tell us how many inside bars we have. When we're trading intraday, and I'm going to have to unlock this stuff, so give me a sec. And I'm actually going to take a short little break, so just give me like 1 minute to drink some water and chill out for a sec. All right. So intraday, we can scan for, first of all, dailies. In the morning, on any given weekday, we're scanning 2 up, 2 down. Because if you have, let's say, 200 2 up days and 600 2 down days, the market's going down today, right? There is some strength, the thing's going up. If they have full time from continuity, you got a lot of evidence of that. It shows rotation when that's occurring, but the market's going down. And the same thing will happen when you go inside. So, like on Friday, there's 960 inside days according to Chuck in the chat. So that was a day where we expect, more choppiness going on. And when that happens, we call that a back ender. So when you're a lot of things stuck in the morning, you get off in the morning, come back the last couple hours of the day, and you get this big move. And that's what you will normally see. In this case, SPY, you see kind of choppy in the morning, did go lower, but then later in the day, you see this is going into lunch, they start ripping it back through the morning range. This is the back ender occurring. So we had about 960 inside days, and then you get the back ender. And this is because all those inside days, they're grinding, chopping around, right? And then once a buyer starts coming in here, in this case, you get the slight lower low by a penny in this stuff, starts coming back through, then all these guys are pivot machine gun. And that's across the whole market. So you can have that type of scenario. We also will count the signals. So we'll go day and force up or down. If you have a high concentration of signals, like when we had the 2 weeks on the SPY, Dow Jones, Qs, all that stuff, we had 270 weekly signals. So when that's happening, we just know everything's a buy. Buy, hold, add. Tells us exactly what to do. And then intraday, we're just scanning that same type of thing on the 60s. So like if SPY is setting up a Rev Strat 60, I want to know how many things are Rev Stratting with the SPY. If everything's going 2 up, 2 down on the beginning of the week or something on the 15, I want to know how many things are going 2 down 15. How many of those have continuity, etc. So we can use the scanner in that way. And you can also just scan for setups. So right now we can't scan before the 60 flips. It's something we've just had the biggest headache trying to get working. If you are someone that's in data science or in software and you want a opportunity to work on the strat stuff, let me know. But each 60, once they have closed, we can scan in force to look for signals that are breaking to try and see where that's going. We can also scan for signals setting up. And It's not ideal because we can't scan this before the 60 flip, but what we can do is we can look at the weekly, daily, monthly signals that are already in force, and then 10 minutes before the flip, I can say, well, like for example, in force on the quarter, and we'll just say full time frame continuity up. I can go through these names, maybe filter it by market cap to get the better spreads, or filter it by spread to get the better spreads. We'll go something like this. So on each flip, I can just go to this list here and check the 60s and say, well, is there a 60 signal to confirm this stuff? And it would give me that. So that is one way to do it, where you can get the 60s before the flip, so you're ready, you get your orders in and everything. But that's like the main way we do it. We're scanning signals in force, we're scanning how many things are 2 up or 2 down, and we're also looking at continuity. So we can scan like quarter in force bullish continuity, and that'll give us all these names. We can also go bearish continuity, and that'll give us all the bearish names, which these are all the sells, right? So that should hopefully make sense. So if we go to Get Pro, you can get the, or actually it doesn't tell you this here, but if you go to, yeah, so it doesn't, yeah, I guess here's the full list. So when you get Pro, it allows you every time frame. In the future, we'll be able to scan multiple time frames at once. It's still just been something we've been struggling with. You get to scan 24/7. We have some watch lists and alerts and that type of stuff, which that's going to be coming soon. But what you do get access to is scanning signals in force, which you can't do on the free version. You get access to all the time frames, 15-minute through the year. On the free version, I believe it's just the day, week, and month. And in the future, you're also going to be able to save all your filters and all that stuff. We just have to hire a developer to get that stuff out because it's been a little bit difficult to do on our own after getting all this set up here. So a fair value gap is just exhaustion risk. What do you mean? Yeah, it's really simple. So exhaustion risk is simply when you go into a low or a high. Ideally a new high or a new low. But when you have a fair value gap, as what some people are calling them, in this example, you'll see this. So notice this 15-minute pivot, the next one is way down here, right? So we're not looking at this gap per se. We're just looking at the fact that this pivot and this pivot is at $1.66, right? So once this pivot's taken out, potentially we've stopped out all the guys that were long in this stuff, besides anyone stops down here. And what we're identifying is not any orders or resting this or that. What we're identifying is this. When this seller starts selling up here at high day, that seller, until they make a new low, we expect that selling to continue, right? So when this new low is made to this, we call that exhaustion risk, where unless those sellers start hitting the bid and stepping up, we've already stopped out anyone with stops here or against this stuff, or anyone with stops against the gap or against morning lows. We've already stopped all these guys out. So the next pivot is just very far, meaning you get exhaustion risk, right? And that exhaustion risk does not mean it has to reverse, which is why you'll see fair value gaps that just get completely obliterated. What it means is that if that seller does not step up and keep hitting the bid and aggressively selling into the lows, when it starts reversing, all the selling of the morning is going to be forced to get covered, if that makes sense. Because now when this goes 2-2, we're nowhere near taking this out yet or this out, so we don't get exhaustion risk until we take this stuff out. So when this starts coming through, you get short-term exhaustion here. You see it goes up, then short-term profit taking, right? Then you get slight lows in here, back through, short-term exhaustion here, but they keep stepping up, taking them offer, right? So you take this out, then we go and look to take these guys out. You can see they just continue doing that. So when we're looking at short-term exhaustion, that's really all we're identifying is we have made a recent low or we're nowhere near making a new low. It's like SPY. This is a gap, right? You can call it a fair value gap or just a gap, whatever you want to call it. But when we go into this gap, first of all, we have the try in here. Second thing is we're nowhere near down here, right? So gets down in here, sellers have to keep hitting the bid. Notice the 3 and then the 3-2 down in green. What does that tell you? Exhaustion risk, short term. And then the buyer starts coming in here, countering this 3, back through it. So when that occurs, we completely reclaim this previous range. Where's it going? Back up there to take out both sides. So that is really all the fair value gap is identifying when you look at this. And you'll see, for example, SPY. So you have fair value gap here, fair value gap here. And instead of marking that out, we just want to mark out our pivot targets because that gives us what we're truly looking for. So notice we take out these two, and then we're not shorting into this. That's just going into momentum, into the lows. We're not shorting that. But when it starts coming back up and reclaiming these levels here, now it's coming back into the previous range. And the reason this happens is because of how the broadening formation works. So you'll see the broadening formation look like this. When this is going two down into these lows, it makes the new low to this, and this, the broadening formation grows in size, so it gets bigger. And then once you start reclaiming that, since the range just got bigger, it's actually more likely to try and take that stuff out, right? And then the same thing is going to happen, poke up, all the way back through that, right, et cetera, et cetera. And that's where you can see these big rallies off the lows. We're going to see SPYs, short-term exhaustion, takes out all these guys, and then 2215, 15 magnitudes a dollar away, so you get to trade that. And then when it goes 2-2 here on the new 60 open, that's a potential outside 60. So when that goes 2-2 here, you flip your long position short because exhaustion risk is not till low a day. So you get all that magnitude to the lows. Then it goes down there, goes inside bar, and it's still going down, right? So it goes down here, reverses, exhaustion risk starts coming to fruition, goes down here, stays down, goes continuation, still going down. Yeah, that is very true. We're getting kind of towards the end of what I was thinking of, or I guess how long this stream was meant to go on for. But so you said there's always better A plus trades out there you can be ready for, not a ticker you need to focus or force a trade on. Patience pays with fewer trades for more gains. And that is very true. And that falls back to the simultaneous break understanding. When you understand the simultaneous break, you can just wait for that because when that occurs, we definitively know pretty much what's going to happen at that point, unless it changes. Small cap stocks, nope, works the same way. If we go to PLTR, it's actually really cool. Actually, was something I mentioned way before it bottomed. I can show you that. Ifx.com lets me search this properly. Yeah, so this is in 23 talking about the buy in there. But everyone was calling me a crazy person when I first posted this. This is so funny. Yeah. So you see, PLTR broad informations are a joke. PLTR hold my beer. I said, we're waiting for the quarterly or yearly. And then I updated that down in here. So you can see the broadening information here. It's at $8. It's been a lot higher. Notice the bigger this broadening information is, more likely it is to go back through that previous range if continuity changes, which it did right here above this yearly open, right? And what we'll notice is when PLTR goes down in here, and I believe that was actually a quarterly chart, so forgive me, but let's see, down in here, is this a yearly chart? I can't quite tell. This definitely could have been a 6-month chart. Yeah, so it's a 6-month chart. But you can see here's your broad information, 2-2 on the 6-month chart, 2-2, there's your 6-month magnitude, but you still get to hold it until it reverses, 2-2, still going up there. So it's going to be traded the exact same way. You just have to understand that they're going to be more volatile more often than not. But if you go to the quarter, same exact thing here. You can see the Rev Strat quarter actionable signal, and then you get the inside quarter add here, 260 or 2657. I believe it gaps some of that. Yeah, so a slight gap into that. You can see the exact same thing. So price is always going to function the same way. It doesn't matter the asset. We can even go to currency futures or currencies like Euro USD. You see the same exact things we talk about occurring on this type of stuff. This year, you can see it's kind of just a chop shop, but let's go to previous times. See a slight lower low, the inside bar actionable signal back through previous range in here. It's going to work the exact same way across everything. If we got a Bitcoin, it's a big one into the new year that we mentioned. At the inside, you're up above this. You can see, boom, 54%. Pretty cool. And Bitcoin was another big broadening formation we talked about back in here. Slight higher high. You can see the slight lower lows in here. And then you can see they start coming back through the previous range all the way to the highs. So it's all the same. yeah, so that's gonna be about it for me tonight. I'm gonna get to bed, maybe watch a few YouTube videos before I do that. Just kind of relax. It is Labor Day, right? But that is gonna be it. So hopefully you guys enjoyed. And again, if you're interested in the boot camp or anything, it's the last day you got to get it. So it's gonna be at stratalerts.com/bootcamp. And if you're already in, thank you guys for joining. It's gonna be a good time, and it's gonna be all the way through September. So go and check it out if you have not yet. But adios, everybody, and have a good rest of your trading week.